Hello and welcome to the Daily Aus. I'm Emma.
I'm Zara.
The latest figures on gross domestic product, that's GDP, show Australia's economy is growing very slowly. So slow, in fact, the Australian Bureau of Statistics says it's just recorded the softest annual economic growth in over 30 years outside the pandemic. So why is that? And does it mean Australia is heading for a recession? We've got lots of questions, and unless you're an economist, these data releases can be a bit tricky to unpack. So that's why we've brought in an expert for today's episode. Nicki Hutley is an independent economist and she joins me on the podcast now. Hello, Nicki.
Hello, thank you for having me.
Welcome. We are talking today about yesterday's GDP announcement, a data drop from the Australian Bureau of Statistics. But before we get stuck in to those latest figures, could you take us through the broader idea of GDP? What does it actually mean? Why are these numbers significant?
Yeah, so GDP, interesting to economics nerds anyway, is actually a concept that's not quite 100 years old, but it was in the dark days after the Depression, almost a century ago, that we decided we had to have some way of capturing how to measure the size of the economy. How did we know whether things were getting better or getting worse? And so some bright spark came up with the idea that we would measure all the money that we spend, all the money that we invest and save, everything that we produce. And we have these three different measures of what we call GDP or gross domestic product. But essentially it's just saying, if you think about the economy as a kind of pie where we're all contributing to it for the way we work and what we produce, is that pie getting bigger? And is our individual share of that pie getting bigger as well? Are we better off?
Right. So back to this latest announcement, Australia's economy grew by 0.2% in the 3 months to June. What does that mean?
That means that our economy is really weak. Now, that's kind of what you'd expect, given that we've had 13 interest rate rises over the last couple of years. The Reserve Bank of Australia wanted to slow the economy down because that's the only way that they can get inflation, those big price rises we've been seeing, back under control. We've seen it particularly in consumer demand. So the things that we buy, whether it's goods or services, going to the vet, at the supermarket, we've been spending a lot less money, but businesses have been investing less as well. We're building fewer houses. It's basically the government spending, and not just one government, all governments, and also our exports that are kind of holding the economy in place. But also the fact that we have more people in the economy because our population, through natural birth but also migration, has been increasing. And of course, the more people you have, the more toothbrushes you need to sell. So that adds to growth too.
Nicki, the ABS head of national accounts, Catherine Keenan, yesterday said that the latest GDP figures were the lowest annual growth seen since 1991-92 outside the COVID years. So I suppose it's easier for us to understand why the economy slowed during the pandemic. But what is it about 2024, about this quarter, that has stagnated so much? What were the lessons maybe over the last three and a half decades in terms of what we can do to get out of this rut?
So there's a couple of things going on here. One is an underlying economic malaise, if you like, that the Australian economy before COVID was quite stagnant. We had very low growth in incomes. People weren't doing particularly well. Growth was sluggish. Productivity was sluggish. And we had this sense that we needed to have some fundamental changes, some policy changes, but productivity is not all up to the politicians. It's also up to the businesses. A lot of it is how you run your business. We were supposed to build back better after the COVID downturn, but we didn't really put in policies in place that allowed us to do that, unfortunately. Now, of course, once we had the pandemic, we had huge amount of growth. That led to very high inflation, which was picked up too slowly by central bankers. And of course, then they had to slam on the brakes by raising interest rates, and that's brought the economy down. The question then is, what do we do about long term? What is Australia's future? And I think Australians, politicians and just everyday citizens alike, have a bit of trouble thinking about what that looks like. The truth is we're actually a services-based economy. You know, things like healthcare, aged care, education, which is a massive export for us as well. It's not all about necessarily sexy high-tech jobs that are the things that are where our future is, particularly anyway when you think about AI and machine learning and the rise of robots. The world will look very different, I think, in 10, let alone 20 or 30 years' time. So thinking's a little bit narrow sometimes. We do, I think, can do a lot better with regional Australia. Really misses out at the moment. And I think, we need to think more broadly how we can engage all Australians in the growth story.
The language around GDP figures at the moment, we've heard the Treasurer say words like soft and subdued. It's a very kind of, I guess, demure approach to speaking about economics. But should we be concerned when we hear the economy described as quote unquote soft?
Well, we absolutely should, because when the economy's soft, it means there's fewer jobs being created, and that means unemployment is rising. We've already seen that. It means it's not only harder to find a job, but then it becomes harder to get a decent wage increase. So we see all the things, if people can remember anything before COVID and the pandemic, we had this sluggish economy, living standards were not going anywhere. Life wasn't essentially better in an economic sense for most people. And whilst there are people who will argue that a growing economy isn't necessarily good for the planet, certainly from that financial well-being point of view, we need economic growth to make sure that we are improving our standard of living.
So there is that growth, albeit slow, that small amount of growth for the quarter. What are we predicting to come next? This is sort of looking back at those months, the 3 months to June. We're in September now. So are we heading for a recession?
Yeah, look, it's way too early to say the R word, but the big question is, what do the policymakers do? And there's two sets of policymakers. One's the Reserve Bank, and they can use interest rates, and the other is governments, and they, of course, can do things like the tax cuts that we've already had, or giving people other types of incentives to help them with the cost of living and other pressures, keep the economy. They can invest in more infrastructure, build more roads. They're already doing a lot of that. That's kind of what's helping the economy go at the moment. So the big question really is what happens with interest rates, and it always takes interest rates a long time to work. You can see interest rates started rising back in May 2022, so more than 2 years ago, and we're still feeling the effects. We still haven't seen all of that come through. The big question is, if the Reserve Bank waits too long, if they wait right up until that point when everything's slow and inflation's back where it needs to be, if they don't cut interest rates before then they risk us going into a recession, because that downward pressure is on the economy. So everything will come down to timing on the first rate cut. So far, the governor's saying not this year. I think it's probably a little bit too early. There's too many risks going both up and down to rule anything in or out at this point in time. In fact, I would think that it's more likely that we should have an interest rate cut before the end of this year, maybe in November, to just start getting things moving. Otherwise, you'll slow the economy too much. And instead of having that soft landing that the policymakers like to talk about, we could have a crash landing. And that's something that nobody wants to see.
So when we're thinking about these numbers and projections, is it more helpful to consider decisions as sort of being made ahead of predictions? So, the decisions that are made in September or the next quarter are really going to impact us a few months down the track. So I'm thinking of that the RBA has said there won't be rate cuts before Christmas, but based on what you're telling us, maybe the idea is that we need a decision before that point in order to affect change around the end of the year.
Yeah, that's exactly right. In fact, if they cut interest rates in November this year, we won't see that for quite a long time. There are some things that are going to help the economy. Obviously, the tax cuts, although it kind of looks like everybody's saving those rather than spending them, but it will help households. Things like the energy rebates that just take a little bit of pressure off the bills. Some state governments are doing a fair bit of spending as well and helping out. So that will offset some of the pressure from interest rates, but not enough at the moment to stop the economy from slowing further. So I think we need to know. But, this is what the Reserve Bank and economists do. They look further out. They're not looking in the rearview mirror. They're saying what's going to happen in 6 months or 12 months, and they're adjusting their policy. The question is, do they get the forecast right? And there's a lot of uncertainty. These models, it's not like doing a physics or chemistry experiment where, you drop the two chemicals in the beaker and they react exactly the way, every single time under the same conditions. Economies are made up of people, and people don't always behave in the same way. So it becomes very hard to predict.
Thank you so much for listening to another episode of The Daily Aus. That's all we have time for today. But if you learned something from today's episode, you can hit follow on Apple or Spotify, or if you're watching us on YouTube, you can hit subscribe. We'll be back again tomorrow, but until then, have a great day.